Hello, ladies and gentlemen, and welcome to today's podcast with me, Russell, and to my left,
Chris. Hi.
Hello, Chris. How have you been?
Yeah, good. Thank you. Was away. Got to see the Liverpool win a football match yesterday at the London Stadium, so that was novel. Kept a clean sheet. Yeah, crazy things happening in the world. We'll maybe talk about a few of those in the world of finance. But how was your weekend?
Yeah, it was pretty good. I mean, I've haven't really prepared much for this podcast because I've spent a lot of time redoing the whole streaming studio. As you can see now, we've basically mission control. I know you guys can't see it, but it looks like a TV studio here now with 4 screens in front of me. So happy days, right?
All right. Yeah, just to add some confusion to our eyes, but hopefully we'll focus in on the important bit as we go. Right, well, last week, should we dig in? Last week was Thanksgiving week. We kind of warned of this last week that maybe the easier trades will be skewed towards the beginning of the week, with Thursday being off in the US and then Friday being that half day. And yeah, maybe it kind of worked that way. I mean, I guess the budget is probably an interesting place to start. Haven't had a chance to bring up cable price since then, but it's probably worth bringing up the pound or maybe even the yields, because this is really where the story begins for the UK. So we saw what was like a scattergun approach to taxes by Rachel Reeves last Wednesday. Now, if we rewind even further, the rumours that we were going to get that increase in income tax was rumoured back in October. This led to the yields rolling off. We then had that article by Reuters, I think, that came out in November suggesting, nope, we're not going to get those. And we saw the yields run back up. Remember, these yields are the amount of money that foreign bond investors, so people who are loaning money to the UK government, how much they demand to be rewarded for loaning that money. So when they're able to pay their own debts, they don't maybe need so much encouragement to come and loan the money. Whereas when they're not paying their debts, which is what was rumoured when the income tax hike wasn't coming, then they were like, well, hang on a minute, guys, who's paying for this stuff? It's going to be me, so you're going to have to reward me for doing so. But when we came to Wednesday last week, the yields actually reacted pretty well. We had a nice softening. There wasn't the income tax in there, but there were probably 20 to 30 pretty important taxation
definitely
hits.
Tax hikes.
Difficult to keep up on what they all mean, really, because they're all kind of it's like death by 1,000 cuts, maybe more than just the axe or the guillotine to get it all done at once. But
well, it was almost like she was giving and then taking away, giving and taking away. Because there were some reasonable things in there. Depends what. Dare I say it? Depends what class of person.
Brave on a podcast talking about politics. My. Let's talk about finance and keep our reputations intact. The most interesting thing of this was the release by the OBR, the Office for Budget Responsibility, their early leak at 11:40 of their announcement to the budget.
That was absolutely all of us. So we've got the fundamental students here, and they've been preparing for this for like weeks, and then it gets leaked early, and there was literally it just destroyed them.
Well, the trade was still pretty easy. Once the press conference began at around midday, once it really got going, it was a pretty straight line down in the yields, and this was reflected. If you look at the cable, I was on this trade. This was kind of reflected on Wednesday by where are we? This is the madness. But yeah, really from when she took to the Commons to give us the verdict, it was kind of up and away on this asset, and it was a really nice rally all day. There were very few bad buys that day on the pound. I know when
as long as you got in
Badenoch had a little pushback, it kind of added a few doubts, brought it back. But nevertheless, she can't be too unhappy with what happened last Wednesday. So that made for a really interesting day on what was otherwise going to be a pretty quiet end to the week. Thursday was dead, and then
Friday was
unusual.
Well, I mean, apparently that hasn't happened since 2019. Was the last outage of the CME.
Well, yeah, we see here we were trading quite nicely. I think the pound's quite a nice look at this. I should probably bring up the silver chart too, because I think that was one of the reasons that certainly from some of the conspiracy theorists are suggesting as to why this happened. It wasn't a cooling issue. It was that the silver market was broken and they needed to shut everything down. Believe what you wish. They're blaming it on a cooling issue, but nevertheless, ticking away, just all very well. But then to see this at 2:45 and then not another print until 1:30 in the afternoon, seeing outages all over the place. So this haven't actually checked the silver price at that particular moment. Did it really flare at that time? If we can scroll back to Friday. Going the wrong way here.
So the question is, what would happen to you if you was in a trade before it shut off?
Well, you can't get out, can you? Right. So you're at the mercy of the markets and where it reopens. Luckily, a lot of these didn't really reopen too far from where they printed. And yeah, there wasn't actually that mad action on the silver market. And certainly I was expecting to see something slightly more interesting than this from that 245 print before the reopen. But yeah, you'll get gapped. But I mean, there wasn't too much of a gap on any of these assets. Maybe they'd made sure that there wasn't going to be big gaps on here. But it made the day really interesting. I know Clive, who trades a lot of futures in here, he just went home because nothing was running. So why be here? But in the afternoon, before the markets opened, we did get some pretty nice moves. Okay, not the biggest day you've ever seen, but pretty nice appreciation in things like gold, silver. In fact, let's just talk about these on the big picture here. If we look at the day itself on silver for Friday, it was quite the breakout to new all-time highs. We've seen a 5% day, 6% day staying here, up again another percent and change so far today. This is being echoed a little bit, not quite as aggressively, by the gold market. So metals are kind of breaking out of this little kind of triangular pattern here, certainly breaking out through these prior highs.
Going for all-time highs again.
Strong there. And then oil as well, copper as well, when you get all of these metals kind of breaking key levels simultaneously, it's not just an isolated event. This is, metal bull market territory. This could be the ignition for that new high. I know we said with gold, once we've seen this 5% decline in a single day from relative highs, within 2 months, every single time we've had a decline this significant, we've always taken out that level, the high of that day, within 2 months. And it looks like we're going to get there a little earlier than, well, maybe right on track, actually. Where are we? 21st of October. So are we going to get this done within the next 2-3 weeks? Looks likely to me that we can take these all-time highs this year.
So looking back at that copper chart, what happened in August? What was that?
Yeah, good question. I mean, it's July. I mean, I wasn't in the office in July, so it's beyond me to comment on that one. But yeah, it's a big gap down on this. I wonder if it's probably to do with the tariffs, right? It's probably I imagine this is a tariff announcement story. This tends to be what's slotting a lot of the commodity prices, as you'll know with your soybeans, of course. How are they getting on?
Well, they're at 42. They're kind of just stagnant at 42% now. I mean, they have been up to 50%. But I think there's an end of corn contract coming up in the end of January. So I'm definitely taking the decision to hold it till at least then. Okay. And then hopefully, if it reopens, we're probably looking maybe, I'm hoping limit up.
Let's see. I'm sure you are.
Limit up.
That'll do you, won't it? Can't even get out of the thing. It just keeps pricing too higher than myself.
A bit like the Swiss depegging.
Yeah, imagine. That would
but
be nice.
In soybeans instead, not currency. But look, you can literally see that it's revisited one area at the moment. But obviously, I'm not trading this technically. I'm trading this clearly on fundamentals. Yeah. And they're still yet to really sign an actual deal. China and America. But they, it almost seems that it is going to be happening.
Yep.
It's just a question of when it's going to be happening.
When are you going to get paid? It's not if I'm going to get paid, it's when am I going to get paid?
Well, I mean,
that always worries me as a trader.
Well, I mean, there's this whole, the whole thing now is they were getting close to it, and now we've got the Japan and China, Taiwan saga going on. So is Trump now going to be using that to cool off on these deals? Because you know how Trump gets with around wars. He wants to be. I think he's just going for a Nobel Peace Prize, isn't he? I think that's his main goal. He just wants.
I think he was gutted he didn't get it this year, wasn't he?
Yeah, I mean there was a lot of I don't know, like all the things that he does do, he is actually stopping a lot of these conflicts, right?
Well, this is what we were looking at last week, wasn't it? We had some pretty interesting moves in oil as we inch closer to a deal between Russia and the Ukraine.
Yep.
We saw a few little whacks to price last week.
That was absolutely
This was the Putin announcement. I think it was on Thursday. No, it can't be Thursday. Maybe it was Thursday. We had think it in fact was Thursday. We saw the Putin announce that he's kind of outlining and agreeing with the format of a deal, and then 20 seconds or 20 minutes later, completely U-turning on it in another statement. So the market's really unsure about where to go from here. If you look at the daily chart, I mean, it's a fairly clear path down. Ever since the old Iranian bombing from the US, we're talking about peace prizes for Trump, dropping bombs on the earlier on in the year might not be the way to get there. But since then, it's just been a straight line down, really. Lower highs, lower lows.
I mean, it's the classic story still. They're not stopping supply. They're increasing supply in the new year. And there's less demand. So, I don't know what they're doing. I mean, unless these people are, kind of factoring in maybe a global recession coming in, could be worrying.
Yep. Oil doesn't like recessions. People spend less money on things like travel, so yeah, that will be impactful there.
So they're trying to get it all out now whilst they can.
Yeah, I mean, I feel like with this commodity bull market, your soybeans, obviously, with the golds, the silvers, normally when you get the whole commodity complex going, eventually oil gets dragged along with it, kicking and screaming. So I'm still bullish this asset from where your buys are. I know we've been talking about these equal lows, liking to get these kind of run out of the market. Might not be too bad a place to do it. We're not in any positive technical ground in my eyes, given we're below like the yearly value area lows now. I need to see something more downside before I can start flipping to the longs.
Yeah, so after doing a bit of research, actually, listening to some articles over the weekend, it seems that with these low oil prices, you would have thought that all of these people didn't want low oil prices because obviously they're losing money. After doing some more research, it seems really that the only people that are really losing money with cheap oil prices is the ones that actually just pump it out of the ground. But most of these companies like Shell, BP and all of that, they actually manufacture oil as well. So they change it from crude into petroleum. So they're kind of making money there. They're making money across the board, which can allow oil to actually stay at low prices. But if you're a company solely doing like pump fracking or pumping, then you are really the ones that are really just, because you're just selling, you're getting it out of the ground, just selling the crude oil.
Yeah, you're a commodity producer, you're not a downstream.
You're getting an awful price for it. So
So
there's no incentive for these larger corporations to actually drive this oil price up because they're still all earning.
Yeah. Well, in the end, it will do as it'll do. I think it wouldn't be surprised to see a little bit more weakness. But where we are seeing weakness today, rolling on, is after what was a hell of a week in the S&P. So I know we posted this out on our group. I think you were able to join that if you so wish. That when you have a Thanksgiving week where you have 4 of the trading days all up, I think of the last 8 times that's occurred, the Monday afterwards has been a down day, right? Okay. It's kind of they got ahead of what's the phrase in markets? They're ahead of their skis a little bit on this one. It was a very bullish week after the option expiry, 3rd Friday of November. Turned the markets round, all very, very predictable, even better than I could have hoped really from this week. And then a bit of weakness today. Now this might just be that technical kind of reality of a pullback after a big rally. But old boy Ueda from Japan has been messing with the interest rate story. These 0 rates that we've seen out of Japan might be getting bumped up this month.
Oh, interesting.
So as of...
Because how long have they been at 0 for?
Yeah, basically 0 for as long as I've been alive, pretty much. He was out at the inconvenient time of 105 this morning. If you have a look at the dollar yen, it's been a fairly clear picture since that time print at 1 o'clock this morning. You see the volatility, the volume kick in at that time. Stops above this level, it's just bled out throughout the day. So we're seeing a lot of yen strength coming in as he rumours, and the reason for the rate hike is not to put on the brakes, as he called it. It's just to kind of take the foot off the accelerator. Okay. Because rates being so low, so close to 0 is stimulative, but that was the idea, and now the idea isn't to become restrictive, it's to become less stimulative, is his pitch towards all this.
Okay, fair enough.
But this is, as we always talk about it whenever we talk about the yen, these are arguably the bank of the world, right? You can borrow money for sweet FA from Japan, and you can invest that in, I don't know, US treasuries north of 4%. Got a pretty good business model there, the carry trade. This is a tale of old as time. And if the yen is going to start notching their rates higher, then maybe this whole thing unwinds. And maybe it's not just carry trade into bonds that they're doing. They're also maybe carrying yen and sticking it into Google, NVIDIA, you name it. All these big tech names who've done so well, perhaps some of the money that's found its way in there is actually from the coffers of the BOJ. And if they start raising rates, then that money will return home. And for it to return home, asset prices need to come down if we got the old more sellers than buyers narrative. So this is why when you look at the move today on the dollar yen, it's kind of mirrored a little bit by the S&P. It's been pretty weak so far today. I don't expect this to be, a lot of this was down overnight along with Bitcoin, which we can maybe talk about too. Another one that's getting absolutely slotted at the moment. But yeah, didn't have a good time post UADA either, albeit haven't taken out these lows yet. So it looks pretty ugly for the stock markets and certainly for risk when you look at Bitcoin down nearly 5%. We've had a rough time on Bitcoin today. Again, this all got going even before the UADA stuff around midnight. There's a view that MicroStrategy, the company that holds a lot of Bitcoins,
right,
and they've kind of just been a bit clearer that they're basically like a crypto fund now, more than anything else, and they were priced higher than that. But now, if the price of Bitcoin goes below their net asset value, they may have to and be forced to start liquidating crypto. And that, as a result, the markets are like sharks, right? It's like when the bond vigilantes came for Liz Truss. They just want to absolutely run these people over because they know they have a point at which they have to bail. And once they bail, they can gobble up all that stuff they bail out of. So now there's a clear target to just nail this crypto market. So it could be a really interesting week for crypto. It's decoupled anyway over the last couple of months from the stock market quite a lot. But yeah, it's getting absolutely done today. It could be a tough week.
We're under 90, so
yeah. And if you look at this on a daily, it's another one of those big down days. We've had quite a few recently, but this is probably had similar in November. I know we had a big one back on 10th of October, but yeah, the story's been nasty ever since then, down from 126s. This isn't a meaningless move. I can't quite see where to grab the measuring stick from.
Because a few streams ago, we were wondering whether it was just backing off to actually go and hit 150, but it seems like that's probably not the case now, right?
Well, this decoupling from the stock market is a concern as well. The stock market, if crypto is going down this much when the stock markets are this close to their all-time highs, imagine if stocks start to get hit. Crypto will be on its backside. I'm expecting that at some stage you will get meaningful pullbacks.
Could this
such an immature market?
Could this signal the end of this cycle?
Yeah, but that creates the start of the next. Okay, but the kind of magnitude of these declines, so you can't quite scroll back quite far enough, but we've had like 84% declines, 76% declines. I wouldn't be a surprise to me to see about a 60% decline. So if you're thinking about, let's say, what would that be? Something sub 60,000.
Yeah.
We're really not that far from there.
Okay.
So this to me would take you back into this chop that we had back in 2024 before Trump came in and started to get all the juices flowing in September last year. Well, we could easily get back into this area. And if we do, that's a meaningful pullback, something that might want to be potentially bought into.
So, but I think Bitcoin has an absolute limit now that it can actually reach before people will actually just stop mining. I think it's about 50. So, and I think...
Well, we can go below that briefly, like with oil, right? You can go below the levels at which it makes sense. 0, you would have thought would be the lowest level for oil, and we've seen minus 40 before, so it can briefly go below them, but to sustain below 50 then probably doesn't make sense.
Yeah, because with the rising costs of electricity and power, the mining costs alone to actually mine Bitcoin.
Yeah.
So this is I don't know, quite worrying for Bitcoin
and Lamborghini dealerships all over the world.
Yeah, I would not. Yeah, I hold a few. I hold some Bitcoin, not massive amounts, but I wish I probably should have sold them out when it was at 100 odd, and then rebought them now. But I'm just holding for a long-term investment, right? Yeah.
Yeah. Hindsight is 20/20, as they say.
Yeah.
And yeah, will we get down to? I don't think we'll get anywhere near the old 2020 lows or highs. Don't worry about those. But I think seeing it slotted in this sort of 60,000, maybe sub, that would be an area where I'd be interested again. So let's see.
Okay.
Yeah, close to today. It doesn't look like being a great week for moves, given how aggressive last week was. Unless we can get some real catalysts out of the news, which we got today, 3 o'clock, ISM manufacturing. We're not getting non-farm Friday. We do have the ADP figures, which they're also doing weekly numbers now. So this maybe is going to be even less interesting than normal. ISM services we're getting Wednesday. Weirdly, core PCE, and it's out at 3 o'clock. Normally a 1:30 number, but this is a delayed figure, as many are. And in fact, some people are telling me that we're getting this non-farm figure out on the 12th. Well, I don't see it on this calendar yet. I still see it on the 16th.
For them changing this non-farm Friday?
The government shutdown. They haven't had the chance to collate the data. So
Okay.
this is why they've kicked it back to a time at which they think they will have the news. But yeah, I was hoping to see data coming out on time, December being back to normal. It's going to be January before things are back to normal. So yeah, go easy out there. But this next week, we're already eyeing up the Fed as well. So the last rate decision of the year is going to be next Wednesday. And if we just want to have a quick sign
what's
off.
the sentiment on that? Yeah.
What Fed Fund Futures telling us today? Well, it's pretty much getting nailed on now. We weren't here where we were flip-flopping either side of 50% last week.
At one point it was at 50%. But...
Yeah, we're getting the cut, 83% priced in. It will take some really meaningful data, really powerful data to get that shrunk. And the closer you get to these events, the more priced in these things become.
Yeah.
Unless you start hearing some rhetoric from some of the central bankers. But I don't think we'll hear from them too much this week because they'll be in blackout ahead of next week anyway. So tons of data, maybe not the easiest week, certainly not as easy. I wouldn't expect it to be as easy as last week. But yeah, maybe a few pieces of data to get your teeth into with the ISMs, ADPs, PCEs. See what we can do.
Yeah. Okay. Anything else to add?
First of the month. So typically this is where disproportionately the market goes up the most today.
Santa rally.
Although having said that, I'm a little bit more bearish today. Let's see how we go. But yeah, generally Santa rally, but maybe we need to get through this week before we can really start putting the hammer down on the Santa rally story again.
Fair enough. Mind you, don't know, the markets are been a very weird thing this year, so maybe we won't have the same kind of situation as we had last year.
Yeah, the exception that proves the rule. Maybe it's that one. We'll see. All right.
Okay then. Right. Well, thank you very much, Chris. Informative as usual, and we'll be back next week with some more. Some more data
pre-fed prep maybe, and yeah, see how we navigated this week. We'll see. I wouldn't be surprised if we're kind of where we are now this time next week. Let's see.
Okay. All right. Thank you very much.
Have a good one. Cheers.